This 2-day price smash was purely a COMEX paper drive-by shooting, period. In the amount of metal held in the depositories, in the ETFs and in the mutual funds, despite the fact that everything's been clubbed down, their level of holdings have gone up and everything's been clubbed down. So what that means is people are holding on tight. They're not letting go. They know something's wrong. They feel it. They know that what the government is doing is wrong. They know that this money creation is wrong. They feel it, and they are not selling.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance. We have a returning guest. Andy Schectman, the CEO of Miles Franklin Precious Metals, joins us as he does every Tuesday for a weekly market update. This is August 17th, 2021. Andy, thanks for coming back on.
Always good to see you. I look forward to these every week. Dunnigan, thanks for having me back.
Absolutely. Our viewers always submit lots of questions before your arrival. This week, we have to talk about, before we get to viewers' questions, we have to talk about what we just endured over the last weekend and the previous week, and that's this huge smackdown in the price of metals, silver perhaps more notably, although both gold and silver got hit hard. Can you talk to us about what in the world happened and what we know about the actual event itself, how such a thing can happen, and then we have some more follow-up questions after that.
Sure. So this is very reminiscent of what we saw in February 1st and 2nd, the Sunday night into Monday morning, when the silver price was smacked down from 30 to 26 at the height of the greatest amount of demand I've seen in the silver market in my career, where companies like myself are shutting down over the weekend, where silver is pushed up to $30, where the amount of inflows into SLV were by a long margin record inflows, where someone dumped 2 years worth of global mine supply, 1.5 billion ounces worth of silver in the middle of the night in the access market after London closed, before New York opened, all at once, which was completely price indiscriminate, which was done specifically to drive down the price, as it did. You see, in that environment, there's never going to be a trader that would sell that kind of volume in the most thinly traded session when London is closed and New York isn't open yet. You're guaranteed to get the worst possible execution. And that's exactly what happened in February. It was driven down by $4. And of course, then the subsequent few weeks after that, Goldman Sachs backdoored 90 million ounces of silver out of SLV after they had already changed the prospectus the night before, 2 nights before, to say, well, we might have sold more shares than there is silver behind it. So they sell shares with nothing backing it, drive the price up to $30, and then knock it down and pull out 90 million ounces of real silver. I mean, it's a genius thing if you're nefarious and are looking to more or less collect all of that premium and buy silver at a $4 discount. All of it was pretty awful. Well, if we fast forward to what we just saw here, same thing exactly really happened. Now, what I'd like to paint a picture of is technical analysis. Very often, the 200-day moving average, when combined with momentum, is the delineation between bull and bear. And when you have the 200-day moving average price of gold sitting right at the 200-day moving average, it's ripe to be knocked down. So this is my opinion what happened, and I'll try to back some numbers up with it to kind of substantiate what it is that I'm saying. So, okay, gold's sitting right at the 200-day moving average on Friday. Sunday night comes, and in the middle of the night, this happens to be a Sunday night when Singapore and Japan are on vacation, 2 of the biggest Asian trading hubs. After London closes, here again, London's closed, New York hasn't opened yet. It's traveling westward to New York City, to the COMEX, and in that environment, someone dumped $4 billion worth of gold. That's I think 2.3 million ounces worth of gold were plummeted onto the market. at the worst possible time, guaranteed to do what? Drive the price down below the 200-day moving average with lots of momentum. Now that triggers the technical analysis aspect of really that controls most of the hedge funds and the funds on Wall Street are controlled not by a trader or an analyst, but by non-emotional algorithmic black box trading programs. By the time all these traders even step foot into their office Monday morning, they were all traded out of their program. So what had happened was they push the ball down the hill, they get it rolling, it breaches the 200-day moving average with ferocious momentum, which then triggers all of the other selling. Now, as that happened, we get gold that falls down $100 before it hits New York, and we get silver down to 22 and change before it hits New York. Now, okay, let me set the stage for what I think happened. They pushed it down so much that all of these funds that were long were forced to liquidate, forced to sell because it had breached all these technical levels, these resistance points. If you look at the Commitment of Traders report that just came out on Friday, in silver, the concentrated net short position fell by 12,321 COMEX contracts. In other words, it hit New York and boom, it popped right back up. 61.6 million troy ounces were covered, either by going long or most of it by short covering by the commercial banks. So they drive it down and boom, they covered 12,321 COMEX contracts. 61.6 million ounces switched from short to long, just like that. They got the other funds to do their dirty work for them, push the price down, and the minute it hits New York, you can see one just like that. Now in gold, the net short position fell by a massive 35,643 contracts, or 3.56 million ounces were covered like that. They drove the price down. It goes down $100, pops right back up $45. Why? Because the commercial banks used the leverage of that covering and of everyone, the leverage of everyone getting out, of selling non-discriminately because of the technical violation and the black boxes that control the sell orders. They all sold, drive it down by $100 as it hits New York, and then pops right back up $40 or $50. And in that process, 35,643 contracts were covered by the commercials. And so what you are witnessing is classic short covering. And I think the commercial banks are trapped. And, you know, one of the things that we talk about is this rise of the group, the others, right? We've talked about that a lot. They bought, the others, 26,541 gold contracts. Do the math, times 100. They bought over 2.6 million ounces of gold, just like that. The others are not giving up. They're actually taking it, and they're going to stand for delivery. So you have a massive group, these others, the sovereign wealth funds, who use that smash down price not to be frightened by, but as a subsidy to accumulate huge amounts of gold. So you have the commercial banks trying to dig themselves out of a massive short position, and you have the others looking at it as a gift. And, you know, look, despite the improvement in the short positions, you still have these there's four big ones. There's 8 banks that are short this huge amount on gold, silver, platinum, palladium, but 4 of them really control everything. And there's actually probably just 2 or 3 big ones, which are thought to be Citigroup, Bank of America, and HSBC. Remember, JP Morgan kind of did the double cross. JP Morgan is net long in the futures market. And so they're the ones who are going to benefit the most as the price rises, but their friends are doing the dirty work for them. And so the thing is this, they're stuck on the short side, because what's really different right now, I guess, and before I explain what's different about them, if you look at the, since late April, if you look at silver and gold, both, I guess, in the amount of metal held in the depositories, in the ETFs and in the mutual funds, despite the fact that everything's been clubbed down, their level of holdings have gone up. and everything's been clubbed down. So what that means is people are holding on tight. They're not letting go. They know something's wrong. They feel it. They know that what the government is doing is wrong. They know that this money creation is wrong. They feel it, and they are not selling. So the bottom line is that this 2-day price smash was purely a COMEX paper drive-by shooting, period. And it was designed and executed for the specific purpose of having as many non-commercial entities that were long sell, and so that the commercial banks could gobble those short sales up. But if we look at it, flip it over, what I'm basically getting at is that the commercial banks are stuck on the short side. Because if you look at the fact that all of these holdings in ETFs, on the COMEX, in the funds, in all of these securities, they're not selling. And the same thing is true, I believe, with the money managers, the funds that usually take the other side of COMEX, where on one end it's the funds or the speculators, and the other end the commercials. They're not going short anymore. Maybe a little bit, but not crazy short like they used to. And by going crazy short, that gives the commercial banks the ability to get out of their short positions. They sell the shorts, they go long. They're trapped. And when you see that kind of drive-by shooting and the price shoot right back up, and in our end of the world, I think you can vouch for me on this, no one sold an ounce on Monday or Tuesday.
Yeah, the calls we're buying, yeah, right.
Right. And so you have the funds holding tight, the ETFs growing in size. No one is selling anything all the way from the top on down. And even the new money managers. One of the things that people used to say is, well, why do they continue to get hoodwinked by this? Constantly, rinse, wash, and repeat, rinse, wash, and repeat. I mean, why do they keep falling for this? And I would submit that they are beginning to get wise, and they're not going wickedly long. And on these smash downs, you're not seeing the funds flip-flop and go way, way long. But what you are seeing are the commercial banks covering. And so I think they realize they're trapped, and they are trying their best to mitigate the exposure to this position. And it's requiring more and more and more ammunition to get less and less and less in the way of results. And I think it's becoming very transparent. And my hope is that in the next rally on gold and silver, they will stop trying to buck the trend, because it's going to kill them otherwise. I think the rest of the world has reached this Rubicon that they've crossed. Of realizing that we are entering a realm of make-believe, where all this modern monetary theory and money creation is going to have reverberations, negative reverberations, and they're not going to go back into dollars and chase equities or interest-bearing investments like treasuries at all-time highs when they're not justified. They're hanging on to their positions regardless of what the commercial banks are doing to make them think otherwise. And I take great solace in that. And I actually do believe that we are reaching a point where they'll make as much money on the upside as they did on the down. But maybe they're getting to the point where they just realize that they're trapped and they have to just eat what they've already dug themselves into. And they'll try to get out best they can. But when the funds aren't playing ball, and nor are any of the ETFs losing ground in terms of holdings, in fact, they're increasing, there's so much demand on the upside. Physically, they're going to get killed. And I think maybe they're beginning to realize this. When you see the amount of covering that they did, massive amounts of covering, specifically to drive the price down to cover, 32,272 short contracts in gold, 12,321 contracts in silver. This is big, and I just think that people need to take a step back and realize that this is an act of some very desperate players, and it's starting to lose its effectiveness, quite frankly.
A couple things you said there. One, I wanted to circle back and make sure I understood, and may help others if there's anybody else in the same boat with me. You were describing, and I've heard this for decades, talking about one of the secrets of making wealth or whatever is using other people's money. The way you described during the thinly traded access market, a major kick to a snowball to get it rolling downhill, knowing that if it breached the 200-day moving average on high volume, it would pick up additional momentum on the behalf of other parties who already had algorithmic stops set in there as stop losses or whatever to just keep that moving down. Am I understanding correctly that because this has been asked for, and this is, in fact, we have a question from Desert Sky who says, Andy, how does Bank of America unwind their short positions in silver? They're estimated between 400 billion and 500 billion ounces. So this has always been a question in a lot of people's minds from a simplistic standpoint. Is like, wait a minute, if you sell something short, then you're going to have to cover it later. So how does that not end up being a net zero, net sum zero game? But you're saying here, if you let other people's money, if you let other players take over the momentum that you start at a strategic point, you let that take farther than it would have gone on your dime, and then you reap the benefit by being able to massively cover your shorts.
That's the thing. It's not Bank of America driving the price down all by their lonesome. It is driving it down below these technical levels that control Wall Street. Technical analysis is pretty much the gospel when it comes to running these large funds. And the delineation between bull and bear is the 200 and the 50-day, but in particular the 200-day. And if it breaches the 200-day with ferocious volume, they're out. And that's exactly what happened. But it's not a trader thinking in terms of, should we sell? No, it's an algorithm, sell, out. And then it just begets more and more and more selling, hits New York, and bam, it shoots right back up 40% of what it lost. That's short covering. And that's how you get 12,321 COMEX contracts covered in silver, just like that. That's how you get 35,643 contracts net long, or I guess the other way of saying it is that they covered in gold. They went long by 3,371 contracts and covered 32,272. So 32,272 times 100 is how many contracts the banks covered in gold, and added another almost 3,400 on the long side, which gives a net 35,643 long from the day before. And so you end up with a situation where they are using other people's money. They start the ball down the hill. Everyone else gets it going further and faster. And then when it hits New York, they're quick to cover. This is how they're doing it. But the thing of it is that I think there's a decent probability that the managed money knows that the mega shorts, like Bank of America, they can't cover. And I think they realize that's the reason they don't want to go really short, to enable those commercial banks to cover. And if the managed money doesn't go short in a big way, in fact, if they pile on the long side, it could be a day of reckoning for the commercial banks, who typically never lose. But we're entering a different period of time. There is a renaissance and an awakening in this country and globally right now to what is going on with the U.S. financial markets and these big banks. And it doesn't take rocket science to realize that they're trapped. And if that's why guys like Ted Butler calls what J.P. Morgan did one of the greatest double crosses of all time, where they went long when all the other banks are stuck short. And when the price moves up, they'll make gazillions on the way up. And these other banks, it can put them out of business, just like it put Bear Stearns out of business when silver went to 21 bucks an ounce. They had this huge short position, the same short position JP Morgan inherited, and now has flip-flopped into a long position on COMEX. So it's coming. The days of being able to manipulate the price are ending. And when you have a world that needs silver the way this one does industrially and realizes its value monetarily in an asset that is depleting in nature, those days are coming quicker than people, I think, believe they are. I think we've never been closer.
We have a couple of questions about, so there's a lot we could still dig into about this whole COMEX market pricing. And one of the prevailing questions that emerges from a lot of the viewers' questions is, why should we believe that without a fundamental change in either rule enforcement or rules themselves, or the turning off the spigot of this easy money that's allowing this unlimited amount of volume of short selling, that sort of thing, that this is ever going to change? What's going to change? And what I hear you saying, one of the fundamentals that's changing, if you observe the market behavior, and I've heard this from Bill Murphy, heard this from others, is that you're seeing people standing for delivery who didn't in the past, and the number of ounces being taken off the exchange physically. You're saying that's evidence that there's that there's a diminishing return. You can only keep throwing so much paper silver at this, but if people are just going to take the physical at those prices, that game has a limited life.
That third group that I've been talking about for a year just bought 26,541 contracts of gold when they did this. I mean, that's a lot of gold times 100 ounces. So that's as much gold right there, nearly as someone sold at 5 a.m. Before the market opened up. Whoever sold this sold almost that. They sold like 24,000 contracts, 2.4 million ounces. The others bought more than that when the price got slammed down. They're saying, hey, thank you. That's awesome. Appreciate that. Now what I wanted to buy is on sale. This is how big money gets bigger. They buy low and they sell high. They buy on the dips. That's a ferocious dip of $100. And what do? They go long by 2.6 million ounces in gold. These are the same people that I have been talking about for a year and a half who are draining COMEX. These are the people who understand what's happening. And I guarantee you they understand the commercial banks are trapped.
If we could shift our attention to the availability of physical precious metals for investment. We have a lot of people ask us questions about, can you guys still get silver? Can you still get gold? It seems like there's been some improvement. We have fewer things that are out of stock or on long delay. And people are wondering, how does this jive with this idea? If there's such a record level of offtake of silver and gold from the exchanges and so on, how is it that the availability, momentarily at least, is better than it was, say, a quarter ago or 2 quarters ago? So can you address that question of availability?
July was the slowest month we've had in 2 years. August is already switched around. We've already done way over what we did in July, and there's still 2 weeks left. July was holidays, vacations, Europe on vacation, people at the cabin, people just trying to go back to life. And I think it typically is the slowest time of the year, the summer doldrums. The mint's caught up. But if you look at every single time that this kind of stuff happens, it begets value hunting and bargain buying. And I was working till late into the night every day this week, past midnight, 1, 2, 3 in the morning, every single night. And there are people out there who have gotten emails from me at 2 in the morning, 3 in the morning. That's how busy it's been. And it has been. And I think that this was it's kind of like the eye of the storm, so to speak, where it was the perfect time for the mints to catch up, I guess you could say, in an environment where as gold and silver have been meandering in the middle of the summer with July 4th and everyone's out vacationing and having fun, it was a sweet spot. And it is a sweet spot. The premiums are the best I've seen in 18 months. The prices are the best I've seen, for the most part, in 18 months. And I really don't believe it lasts. Based upon the volume that we've seen just in the last week, it's right like it was in February. All of a sudden, when they smash the price down, people come out like, mosquitoes on at 7 o'clock in Minnesota. It's like they're everywhere. Same thing here. People are everywhere looking at this as a value, as a subsidy, and it doesn't make sense in a world and in a country that is, losing its bearing or already lost it. Look what's happening in Afghanistan, for goodness sake. And I think it's emblematic of the fact that the people pulling the strings, they're not always doing the right thing or doing it in the right way. And same thing goes here. I just think that they gave us a gift. And I think the third reporter group, the others, those that have been draining COMEX, looked at it as a gift. I'm trying to tell people, honest to God, I believe it is a gift. That premiums are good, availability is good, prices are good, and the biggest money in the world is showing you buying 2.6 million ounces of gold when 2.4 million were used to drive the price down. They say, thank you. That's a subsidy. I love it. When the biggest private money in the world is doing this, it tells me that we're on the right path. If they were all selling, I may feel very different. The fact that they're buying and the commercial banks are covering huge amounts, that's a massive amount of covering. It tells me we're on the right page. Because in years past, they would have just stepped on it more and driven the price down further. And no one in the mainstream would have even batted an eye. And guys like Ted Butler and others would be screaming into a vacuum. It's changing, and people are waking up to it.
And also, you would see that at the end of the SmackDown, then that hits a new plateau rather than that 40% knee-jerk rebound off that level when people started covering and grabbing physical. Related question here. This is going to be it's a rather caustically stated, but I think it's worthy of discussion. Cerebral says, Schectman is a totally unbalanced silver pumper. He spreads rumors of ASE monster box shortage and supposed insider fake news that the U.S. Mint would suspend mint box production in April. All lies. Well, what did happen? And I want to preface, before I give you a chance to respond, I want to preface that you and I, at my urging, have tried to do myth busting on about a half a dozen different situations that have come up. We've had people saying, oh, there's going to be $67 Silver Eagles coming out. We looked into that, clarified that those are only these special gift uncirculated box sets. People saying, we helped people be aware about a security breach at an online dealer and talked about a lot of the security concerns around that. So we keep trying to, and talking about, guaranteed protection if you buy certain numismatic coins, it can't be confiscated, or no, that's not exactly true. Here's what, so you and I have a thing about trying to bring out a very holistic perspective about stories so people can really be informed and make good decisions. What actually happened at the U.S. Mint? What do we know going into it? What actually happened from that April for 2 months with U.S. Silver Eagle production?
Dunnigan, you're one of the most stand-up guys I've ever met in this industry. You wouldn't stand for me doing that for a second and associating with me. This person can feel the way he wants. Actually, I don't care. I'm trying to get these people to believe me is a fool's errand. All I can tell you, as a U.S. Mint, one of only 27 representatives in the world, I didn't lie one bit. They did not produce a Silver Eagle for the better part of 4 months. And anyone who says different, they're lying. They did not issue any Silver Eagles for nearly 4 months. And then they came out in July with the Type 2 Silver Eagles. That is a fact, 100% a fact. It's also a fact that they ration gold buffaloes and eagles 2 weeks into the new year in January. That is a fact. And evidenced by the fact that the Type 1 2021 Silver Eagles have been selling for monstrous premiums the entire year because no one had any. They got a big allocation at the beginning of the year. They sent some more out for the next month or two. And by April, that was it. They made nothing. So he can say what he wants. He's not going to believe me, but it's the truth. They made nothing and sent out nothing for the better part of 3, maybe 4 months in Silver Eagles. And, in terms of the premium, go look at every other company out there. Right now, I guarantee you I can beat every company out there in Silver Eagles. They're all selling them more than we are. They're all $10, $11, $12 over. Everything that I said is true. And I'm not a Silver Eagle pumper. In fact, anyone who's ever called me, and I invite anyone to dispute this. I've told every single person I've talked to nearly for the better part of 6 months that Silver Eagles are too expensive, don't buy them, and I am a U.S. Mint distributor. Did you ever see Miles Franklin promoting Silver Eagles over the last several months? No, and we are U.S. Mint authorized resellers, one of only 27 in the world. If I were trying to pump this stuff and blow it up, I would tell people, buy the Silver Eagles, buy the Silver Eagles. They're huge premiums. What are we doing instead? No, Britannias, Krugerrands, Philharmonics, Kangaroos, Maple Leafs, junk silver, silver bars. We're not doing Eagles, and it's true. Trying to appease everyone who has a limited scope on reality as it pertains to this industry is a fool's errand. I've tried to the point where I've even lost sleep over it, and I'm sorry he doesn't believe me. All I can say to him is this. Dunnigan Kaiser is one of the most straight up guys I've ever met in 31 years in precious metals, and he would not stand for me lying or being disingenuous, because it would be a reflection of you, Dunnigan, and I know for a fact that you wouldn't stand for it if you thought for a minute I was coming on your show and telling untruths. So, it is what it is. That is the fact. They never publicly said they were going to shut down. Like, I came on in April or in March and told everyone this was going to happen. I said, I have been told by reliable sources that they're going to shut down. They never actually locked their doors, but they produced nothing for over 3, almost 4 months. And that is the truth.
Yeah, and now when we have clients who have a fondness for the Type 1 2021 Eagles, Silver Eagles or whatever, it's like, good luck. Yeah, I think I had 1 or 2 Eagles.
So, I mean, I'm not lying. You can't find them. They stopped early. So specifically, so people would buy the Type 2s. I have 100,000 Type 2s in my warehouse right now. 100,000. If anyone wants 100,000, I'll sell them right now. Right now. Don't have any Type 1s. Why? Because they stopped making them the first quarter, and you can't find them anywhere. And I talked to other large distributors. They don't have them. They just don't. So I'm glad you asked that question. And
yeah. That's the other thing that, and I mentioned, you mentioned how I wouldn't tolerate misinformation on our channel, and I appreciate that. That's why I know I've landed in the right place, because when we were in this 2021 Natural Resources Symposium together, or last year at the 2020 Sprott Natural Resources Symposium, and we had booth visitors come in who'd worked with you and your dad over decades, I got, as a new guy, having worked with you only for a year and a half, I got their perspective from having worked with you guys for decades. So that confirms my gut understanding that I'm working with the right people.
Look, you know what? It just seems that there's so much mistrust out there in this industry. And
that's understandable. This is, as Jim Rawls says, we are living in the age of deception and betrayal. And when you can go down, and it's a long list. I think I'd run out of fingers if I started going down the list of major institutions, roles, leaders, and that are really letting us down. Worse than that really undermining the freedoms, the constitutional rights, the truth, and everything on down the list. So I think we could each make our own list of major players who have betrayed us and are ongoing, and it seems like it's accelerating. So here's a question. Are we going to bust this myth or confirm it? Two Dads Plumbing says he listened to Andy chat online recently. Hearing him talk about the government going after our IRAs as a risk kind of freaked me out. Been thinking about cashing it out, buying gold with it. Are there any signs to look for to know it's going to be imminent? That's always tricky. Before something happens, how do you know it's going to be imminent? What do we know about the potential risk to people's IRAs in the current environment? Do we have any reason for specifics about that? Or is it just the general principle that anytime you've got the government with its fingers in there, have a vested interest of the future, getting tax revenue out of that in the future, there's no privacy for one thing. And what do we know about IRAs?
All right, so I did say that. And before I tell the little parable, someone sent me an email and said, could you send me info where you saw that? And it was 2009, and I did the Google search and found the article, and I sent it to the guy. Anyone wants me to send them an article that references this, send me an email at Andy Miles Franklin. I'll send it to you. Because again, there is no, look, I make money if people buy precious metals IRAs. I try to be truthful, period. And I'm not a genius. I try to come across as being sincere and tell it like it is. I think anyone that would go online nowadays and lie is a complete idiot, because you'll be outed in about 10 seconds, and it's not hard to do. And that's why when this guy says what he said, this other guy, he didn't do his homework. He doesn't know what the hell he's talking about. And so for him to go out and call me those names without even knowing just tells me that this is a person who doesn't do his homework, period. Now, as far as that is concerned, in 2008, we've talked about recently what had happened with the money markets. And you had personal experience with that, because the money market you were in was invested with Lehman Brothers. You and your wife were told you couldn't access it because there was some stuff going on they had to reconcile. When this happened, there was a bill that was introduced that made its way down to the House floor that basically said, in this event, we need to nationalize IRAs and mandate that everything that is in this pool of money, and I think at the time it was like 17 trillion, which was the same amount that our debt was then, almost dollar for dollar. And what the idea was to take those IRAs and move it over here into an annuity backed by U.S. Treasuries. And they would guarantee, the U.S. government would guarantee that, you'll get your IRA back, your money back, but it's got to be invested in U.S. Treasuries. It would be your patriotic responsibility to have things invested in U.S. Treasuries to stabilize the money markets, to stabilize interest rates, to stabilize the system. But the minute Pandora's box was open, I was out. And I told the story. When I was 2 years into this industry, I had a client, and God rest his soul, his name was John Tomchek, and he's been gone for a long time, but he was a geologist. And he said to me, Andy, how much money do you have? And at the time, I'm 21 years old. I said, I have $9,000 in an IRA. So I had been there for 3 years. I put $3,000 in per year. And he said to me, I want you to do me a favor. He said, I will give you a $100,000 order right now. And that was a big order in 1991 or two. And he said, but I want you to put all $9,000 into a stock called Western Copper. Okay, John, I'll do that for you. And I did. And it was all at like 6 cents a share. Within a few months, Western Copper was changed to Western Silver. Western Silver shortly after that got bought by Glamis for $7, and Glamis was bought by Goldcorp for like $30. And I turned $9,000 into $650,000. I've never in all my life experienced anything. It was like cryptocurrency money, and I've never experienced anything like that. And I let it sit there in an IRA. Really, at that point, I had it going in and out. I bought some Freeport McMoran and some other stocks that I liked, and it was sitting there. And when that came out, at this point, I'm a young guy. I'm 29 years old in 2009. And would that be right? 39 years old in 2009. And I have 3 children, young children at that point, and including one that was 2 years old. And I make the decision to cash out my IRA and pay what amounted to a $65,000 penalty and $250,000 in taxes. And I didn't lose a minute of sleep. I put it all into silver and gold. Why? Because I felt once Pandora's box was open, the likelihood of that happening grew exponentially. Now, was it the right thing to do? Probably not. I probably would have been better off leaving it. But like all the decisions that I make, I take accountability for them. And I still think it was the right thing for me to do at that time. Now, in retrospect, I probably would have grown it more, leaving it where it was. But that's neither here nor there. The point of it is I talk about this, that they talked about nationalizing IRAs. And I found the article and I sent it to this gentleman just yesterday. That's why I did it. Could it happen again? I don't know. You tell me. In a world where 40% of every dollar ever created since the beginning of this country was printed last year, you tell me, can these things happen? At the lowest interest rates in human history. Can these things happen? I would argue, yes, they can. And we are in a very precarious position. When you have interest rates that are well below the level of inflation, can it happen? Absolutely it can. When you have an environment where interest rates rise and it crushes the entire system, can it happen? Hell yes, it can happen. So is it the right thing for everyone to do? No, it's not. If it is for a certain individual, this is why I did it. And there is no fear mongering. I saw it clear as day, and I acted upon it. So there was no legislation that made me do it. It was a proposed legislation that made me do it because I figured once it's discussed, it's now on the table. And you got to be proactive. And that's why I did it. And that's what I was talking about.
Thank you very much I had not heard all of that story. I appreciated hearing it. It echoes some stuff that went on for my wife and myself about that same time and a little bit later, which we can talk about another time. But I did want to realize that I've let the time get away from us because I was so fascinated here. And I need to give you a chance to tell us about a weekly special or else we're going to go way over time.
Not a problem at all. So we're doing the 2021 Silver Maple Leafs at $4.75 over spot any quantity. I am fairly certain that'll be as good of a price as anywhere in the country. We try to check this out before we offer it. The specials that we had run over the previous weeks are not really specials anymore, but we're trying our best to keep the prices where they were. We want to be attractive on everything. Best we can get as much silver in everyone's hands as possible, and gold for that matter. Let's not forget about gold. I wouldn't count gold out. When you see 35,643 gold contracts covered, And it tells me that the price in gold is, that gold is important. When you see this others group purchase 26,541 long contracts in gold. These are the people draining COMEX. These are the most sophisticated private investors in the world. The family offices and the sovereign wealth funds don't count out gold. And but the real value at 75 to 1 ratio is undoubtedly silver. And I just want to touch on this for 1 second. I know we don't want to go over, but when I talk about buying silver, there's a real big part of me that feels ultimately we want to be in gold because of the reclassification as a tier 1 reserve, and because the biggest money in the world is on or has embarked upon a 4-year buying spree. I think gold ultimately is where we want to be. But when you buy at 75 to 1 and you realize it's depleted in nature, that only 30% of all the silver comes from primary miners, that the big deposits were found years ago. And that means 70% of all the silver that comes to market is found by other people mining other things. And these other people mining other things, people always say, well, why don't they hold back the supply? Well, Keith Neumeyer does and Endeavor Silver did. But that's only 30% of all the silver coming to the market comes from these guys. The rest comes from people who don't care. They're mining other things like zinc and lead and copper and tin and whatever. So they're going to sell it to the marketplace. So when you realize that it's depleted, it's increasing in uses in the digital and green world, that it's priced at 75 to 1, it's averaged 42 to 1 for the last 150 years, and it's now coming out of the ground at 7 to 1, it's the buying opportunity of a generation. But when we regress to its 150-year average of 42 to 1 and beyond, in 2010, it was 85 to 1, the second or third time in human history. Within 7 months, it was 37 to 1, with $1,915 gold and $50 silver. What if it regresses closer to its natural mean? They call it the God's ratio. What's coming out of the ground right now? 7 to 1. Arguably, it's 11 times undervalued in relation to gold. So let's say it goes to 35 to 1. Switch it back in, or it would be actually 37.5 to 1. Switch it back into gold, and you would double what you could otherwise buy today. Or if you traded for every 1 ounce of gold today you trade, you get 75 ounces of silver before any premium. So maybe it's 70, but call it 75 just in spot prices. And if it goes to 35 to 1, you switch back and double what you started with. Ultimately, I think there should be a plan involved in people buying lots of silver. There are some people that would disagree with me. Big Swear, Chris Marcus would disagree with me that you want to completely be in silver. And I'm not completely convinced that in the end, it will be more about gold. And so you don't have to always get rid of all your silver. But what I am saying is that silver right now is a buying opportunity of a generation, not only because of its extreme value, its depletion in nature, and its use cases expanding industrially and monetarily, big time monetarily. But it's also a pathway into getting a whole lot more gold before it's all said and done. So anyways, I say this, Dunnigan, because other than the $10 and $20 gold piece special we did a few months ago, we always talk silver because it really is a unique opportunity. And I am a gold bug at heart. And I think ultimately this is a pathway for people who really like gold into getting a whole lot more gold. It requires a little bit of effort. But I can promise you this, the minute that ratio flip-flops, you know it's going to be the only thing that I'm talking about on your show and every other. So that's my thinking. And I'm thinking 2 steps ahead here. Like in chess parlance, I'm thinking 2 steps ahead. And I think that when that ratio, anytime the ratio is 70 or above, you want to be in silver. Anytime the gold to silver ratio is 40 or below, you need to be in gold, in my opinion. And as we get closer to that 7 to 1 especially, but if it actually reverts to what it actually is coming out of the ground at, that's an 11-fold increase. Or saying another way, silver is 11 times undervalued.
Yep. I just had a good returning client this morning, actually, who did what you're just describing. He actually drove to our operations hub, delivered a bunch of gold that he had purchased from us about a half a year ago, and swapped it all into silver. And he's going to store that at the depository there so that when the ratio normalizes, he'll be ideally positioned to swap it back. So,
and it will normalize. It will. It will. And the fact that we are running continual deficits, it will normalize. So look, Dunnigan, I thank you for asking these tough questions. I really do. I want people to know that the last thing I'm ever going to do is go online in a world where information is so easily discernible and lie. I'm not. And I'd love to sit down and have a beer with that guy so he can meet me face to face and know I'm not lying, but that's not an option. So let's just simply say to that gentleman, I'm not lying. And the U.S. Mint made nothing for 3 months. And when I say something publicly, the last thing I'm going to do is embarrass myself and my family and my business by lying. There's no reason to do that. We've been around long enough. I don't need to lie to get everyone to come and buy silver from Miles Franklin. It's something I would like, but I want it to be earned on our own merits.
Well, we're always grateful, and as our viewers, for your presence here weekly with us. I know we kept you a little bit longer, a lot longer than we usually do.
These were important topics.
But thanks for hanging with us, and always as we ask you for your presence and grateful for your presence here for these weekly market updates. For future, we've had several requests. As you mentioned, July was a slow month. August is more than making up for it, that kind of thing. There's recurring questions I get that I don't have the insight into as far as anything that could be shared in the future, as far as actual metrics of sales ratios, gold, silver, buybacks, purchases. I know that some of that is competitive and proprietary, but it's of high interest to our viewers.
I can tell you right off the bat, silver represents over 90% of what we're doing and has for the last year and a half. But any of those metrics you want to talk about, I'm game. Next week would be fun.
Okay, cool. All right, we've been speaking with Andy Schectman, CEO of Miles Franklin Precious Metals. As always, guys, if you don't want to miss out on a single interview with Andy or any of our weekly specials that are always Tuesday night, 9 p.m. Eastern, and any of our guests, make sure you get on our mailing list. I continue to get emails from people saying that, I'm getting shadow banned. They're not getting notifications from YouTube about new releases. Guys, you don't have to wait for YouTube to notify you. You just get on our website, libertyandfinance.com. First of all of our videos are going to be there. And secondly, you can just put in your name and email address and click submit, and then respond to the confirmation email, and you're in. We'll send you an email of every single interview that we have, and any of the links or information that are available from our guests will be in there as well in the description. So don't miss out on anything. Go to libertyandfinance.com, sign up for our free email mailing list. Andy Schectman, thank you for joining us again here for this weekly market update.
Always a pleasure.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.